Hello, good afternoon, everyone. Welcome to our session on financing sustainable marine and freshwater infrastructure. My name is Sien. In daily life, I work as a resource economist at Research Institute Deltares, but today I will be your host for this session. Allow me to shortly set the stage what we will be talking about today. Across the globe, we are dealing with a global investment gap in marine and freshwater infrastructure like ports, navigation, coastal protection, natural capital. And that means that we are funding less projects than we could or should be doing in light of, for example, climate change. At the same time, we see a lot of attention on nature-based solutions and more sustainable solutions in the field of freshwater and marine infrastructure. This attention is not only coming from our own world and our own clients in dredging and in coastal and river areas. The institutional and private investment world are also increasingly interested in shifting their portfolios away from things like the oil and gas industry and towards more sustainable projects. Against this backdrop, about a year ago, a group of people from both sectors asked themselves the question whether we can find a connection between the private investment world and the world of dredging and marine infrastructure. In the early days of 2020, when the world was still very different from today, we met with a group of representatives from each of those sectors in Switzerland to start learning each other's language and see if we could find some common ground. As a next step in that journey, we have now published a report together that takes the next step in this journey, and we will hear a presentation about this report shortly from Arjan Hydra, our speaker. Arjan is one of the initiators of this initiative, and he is also the director of, in daily life, the Vital Ports Initiative, which is an NGO that aims to provide evidence-based guidance for sustainable port development, using social value to create solid revenue streams, aka cash flows. Arjan holds a PhD in planning, a master's degree in civil engineering. He has also worked at the Cambridge University as a visiting scholar and has wide experience in international port consultancy, including at the US Army Corps of Engineers and at Rijkswaterstaat. After Arjan's presentation, we will have a panel discussion about this topic with three panelists. I will quickly introduce who we have today at our virtual table. We have Paolo Alemanni. Paolo is a managing partner and co-shareholder at B Capital Partners. This is an investment house that focuses on infrastructure assets based in Zurich. Paolo has over 30 years of international experience in private equity investment and financial asset management in the infrastructure, energy, and transportation markets, where he has worked as both a principal investor himself, as well as advising on managed accounts and infrastructure funds. Next up, we have Lotte Vandekeybus, and she is a structured finance manager at the Belgian dredging and engineering group DEME. She holds a degree in business economics, and at DEME, she's involved in arranging financing packages for DEME's projects across the world. She has experience in international trade and export finance, and she loves bringing together different parties from the financial and credit insurance world. So that's great to have you at the table. Last up, we have Torsten Thiele. Torsten is the founder of the Global Ocean Trust, and he works as a senior advisor to the Blue Natural Capital Financing Facility of the IUCN. Quite a mouthful. I'm sure we get to hear a bit more about that later on. He's also a senior research associate at the Institute for Advanced Sustainability Studies in Potsdam in Germany. And in his research, he focuses mostly on ocean finance, sustainable infrastructure, and governance solutions, which he has published and consulted widely. He has also spent over 2 decades in project and infrastructure finance with leading financial institutions. This all promises to be a very interesting session today with the right people at the table. Before we start the session, I would like to ask you if you have any questions at all. Please post them in the question box so we can pick these up at the Q&A session afterwards, either for Arjan or for the panelists. Then without further ado, I would like to give the word to Arjan.
Well, thank you, Sien, for your kind words and the introduction. Well, it's my pleasure to be here and to show you a few slides about the project we undertook. And actually, I'm given less than 10 minutes, I understand. So it's quite a challenge to present all the work we did in the past year with the joint partners. Talking about the joint partners, the report I'm going to present is a joint effort by the International Association of Dredging Companies, of course, the Central Dredging Association hosting today, the Vital Ports organization, my own company, the insurance giant Swiss Re, and also mentioned already by Sien, B Capital Partners, a specialist firm in financing infrastructure, also from Switzerland. Let's see if my slide clicker works. Yes, and perhaps the first question that may arise in your mind is, so why this report? Well, one of the quotes in the first chapter of the report states it quite well, I would think. It says, against a backdrop of climate change, sea level rise, and limited public budgets, the investment gap in marine freshwater infrastructure leaves a critical role for private capital to play in bridging this gap. So it's all about using the private capital to push forward all these green projects. And then a few words about what we are actually talking about, but with this audience, I guess it's quite clear already. So sustainable marine and freshwater infrastructure, what is it? Well, these are the waterborne works, as you are all very well accustomed to, like the works along coastlines, estuaries, rivers, canals, and the port areas. And of course, these works serve a purpose, like, for instance, flood protection, navigation, and so on. So that, in a nutshell, about the title and also the abbreviation SMAFI to make it a bit shorter. Then one layer deeper about this report. As you are all aware, and Sien already also mentioned, that in the wider dredging community, for quite some time, they are seeking to scale up their green portfolio. This also takes place in the financial sector. They are seeking enlargement of their green portfolio, sometimes driven by regulations or ESG criteria or other incentives. And so it would certainly make sense that if these two sectors would work together, there most probably would be a lot of synergy to be generated. However, both sectors seem very unfamiliar with each other, so there's quite a gap to bridge in to actually get to the point of generating synergy. As Sien already mentioned, it's almost like we're speaking different languages, so there's quite some work to do. One of the conclusions in talking jointly in the roundtable and quite a few follow-up sessions is that a dedicated report on this topic would certainly help. So then you have something on the table you can work from. So that's a little bit the bigger idea behind this report. Then in the short time, I will give you a quick impression. It's not more than a quick impression, so please feel free to download the report freely yourself. You can find it at www.financing-smafi.org. But a quick impression. These are the chapters, chapter about the market size and the green potential, characterizing the projects, and that's really important. Key findings, reflections from the financial sector, but for this audience, perhaps also very interesting are the 9 case studies, real life cases where the financial structure is shown. A few words about market size and green potential. We did a literature study. And actually literatures appear to be very fragmented. So there's not a single number we can mention that this is the current market size and this is the potential for the future. So it's all snapshots of parts of the sector, different geographical areas, different time spans. However, the market is driven by quite a few trends, and all those trends are upward. So the expectancy is that the market will certainly grow quick, for instance, through climate adaptation measures, ecosystem restoration, carbon trade, biodiversity offsetting, or just having traditional projects done in a more sustainable way. So that as a few notions about the markets. Then characterizing the projects, I already mentioned that's quite important. If you want to have an influx of private capital and financiers in this kind of projects, some kind of a classification would be very helpful. So you can build a track record, so investors can find their own specialist niches. So you can address specific risks for certain types of projects. And you can characterize them in multiple ways. We are very much accustomed to do this by the physical aspects like navigation projects, land reclamation, and so on. But the financial sector looks at it in a very different way, for instance, by characterizing the cash flows. Here is still quite some work to be done in the future as well. And yeah, please dive in the report. There's quite some more on this topic. Like I mentioned, I'll go through the report very quickly, and this comes from the reflections from the financial partners. This is a quote from the reflection as written by B Capital Partners, and you can ask Paolo Alemanni in a few moments a lot more about this. But one of the things that's really important, and I'll come back to it a bit later, that private capital requires standard, stable, legal frameworks to ensure appropriate risk allocation and safety net for proper business conduct. It's not only that they need it, but it's missing so far. Another quote, this comes from the reflection from the insurance sector, Swiss Re, redirecting existing insurance practices towards sustainable marine infrastructure encourages more commercial practices and private investment. And as you can imagine, nature-based solutions, green solutions might have a little bit of a different risk profile or more uncertainty in future performance. So de-risking these kind of things and deriving stable cash flows from that will be very helpful to get engagement from the private sector. Well, this is an example of the case studies in the back of the report. Each case, each of the 9 cases have a short description, some references for who wants to dive deeper into the topic. But perhaps most interesting for the audience is are the infographics, which show kind of institutional financial framework that was used to develop these kind of projects. And these are all quite different, but there's there's a lot to learn from this on how to proceed, or perhaps also to work towards these frameworks. Different example, mangrove restoration, multiple revenue streams on the bottom line, fisheries, carbon sequestration, ecotourism. You can all have a kind of diversified revenue streams to make these projects happen. But this is just another example. That brings me to the conclusions. So we have 6 conclusions, and I will show them all to you. First of all, we concluded that joint holistic screening with the dredging community at large, but also the financial sector jointly, would be very helpful to focus the scarce resources on the most promising opportunities and hopefully build a kind of snowball effect. Secondly, certification of green projects is very important. It's not there yet, but from the financial side, it is very important that they need to be assured that a green project is actually a green project. They're very sensitive to reputational risk, and nobody wants to get engaged with projects that might qualify as greenwashing, so in reality not as green as it was supposed to be. So this is certainly something to work on as well. Standard legal frameworks, already mentioned before, that would also help to have all actors feel comfortable in developing a project. It also helps building a track record. It also helps having a kind of risk, knowing where the risks are, and so on. Without this, it's all one-off efforts, and it takes a lot of effort to get a project running. Then, and this should be number 4, 5, 6, reporting tools and harmonized methodologies. We all feel that green projects, sustainable projects provide more value to society and more value in the future, but it would be really helpful if we are able to quantify this value. This brings support from the financial side as well, and also from the cost-benefit analysis side. Number 5, here quoted as number 2, the de-risking side, already mentioned. Perhaps these green projects come with new uncertainties, other uncertainties, other risk profiles. So making de-risking that, linking this to providing a more stable cash flow would certainly help as well. And last but not least, it's not only about the private sector, the public sector is important as well. So policy incentives from that side would also very much be helpful in pushing forward all these efforts. And with that, I bring it to the end of this presentation. I thank a lot all the authors and contributors for this report. A few of you are today attending and in the session also as panelists. And I thank the audience for attending this presentation. And with that, I'll give it back to you, Sien.
Thank you, Arjen. That was very nicely within 10 minutes. Very clear presentation. Paolo, I would like to start with you. We just heard from Arjen a quick introduction about what we view or what we classify as sustainable marine and freshwater infrastructure. Now, I'm curious, as an investor, what do you see as, or how do you classify an infrastructure asset, and when does it qualify as sustainable?
Let's focus on the maritime works, I would say, otherwise we have a very broad range of opportunities which brought from, it can be energy, can be transportation, can be anything, including social. We have been looking at projects in the PPP setup in a variety of different segments, jurisdictions, and so forth. So I would try to stick to this. Let's make it probably a little bit more practical. If someone has the chance to read the report, there is a very exemplary case, which is the number 7. It's a work, a maritime work to defend the shores in some part of the UK, and the contractual structure is very similar to the one that we can see in funding and developing an hospital in UK. This is the best situation that we can find. Clearly, on top of this, we have the sustainable effect, the positive impact on the environment, which is on top of the financial returns that we are looking for. So this is probably, if you have the time, please look into this report, look at the cases, and you have the possible breadth of different solutions. But if I can say what we are looking for is number 7 in this case list, which brings me to the matrix of this. We usually try to actually we are just investing equity, not debt. The largest part of the capex or the financing of the capex comes from lenders, which are a little bit more sophisticated than private equities. So in any case, the joint development together with the insurers of a package, of a financial package, is something that needs cooperation among the various parties. Therefore, what Arjen was saying about the joint screening and coordination is very important, because brings to the table of the developers, the sponsors, the project sponsors, or the public authorities, a very relevant competence and knowledge about how you should structure it in order to assign the risks. So if we take the example of the UK project, this is clearly based on an availability or performance fee, which is stretched over 25 years. This is the best we can have, because you know that there is a stable cash flow. There is a counterparty, which is the government, the UK government or the local government. In any case, the country risk is accessible and quantifiable. And therefore, the business plan can be quantified. What is not yet there, and this is probably what Arjen was saying, is reporting tools and impact of the sustainability. This is something that is also new for us. We, as an investor, we do need to show our investors, or the financial investors, or the ultimate beneficial owners of the funds where we deploy our money, that we do have a positive impact on the environment. And this is required by regulation in Europe, according to the new SFDR regulation. So this is something that is coming, is really contingent, and we need to have it. So we do need to develop together something that can be measurable, not only the cash flows, but also the impact.
Thank you so much for that. I'm sure there will be questions related, so let's hope we can find them in the chat. Please feel free to ask them. As you correctly mentioned, and as we maybe all know, the majority of the infrastructure assets that we work on in the marine and freshwater environment are typically paid for as well as financed by public organizations. And today we're talking about the role of private finance. Torsten, I would like to ask you, do you believe that we should be indeed putting this effort in connecting private investors to this kind of freshwater infrastructure? And what are sort of the core opportunities that you have come across in your research and your work at the BNCFF?
Thank you very much. And first of all, congratulations to the report. I think this is really helpful to start this discussion. And I think the ambition, which is in the long run, we need to have significant private finance into this space, is exactly the right ambition. Now, the path to get there is challenging, and I think some of the challenges have already been mentioned. However, there are also a range of opportunities, and I would start with maybe 3 of these challenges and then refer to the opportunity. The first was something Arjun mentioned about, is the overall project potentially being nature-based riskier? And what does it mean to the price point? When we started with the climate bonds world, that was the starting point as well. It was seen as something new. Where we are now is that we have a green premium. In fact, pricing of climate bonds is now more attractive than comparable general bonds because they have achieved the challenge that was mentioned, which is clarity on impact assessment and reporting. So yes, this is important, but I personally would posit that one of the great advantages in the longer term for the private investors is that a project that is aligned with nature is inherently less risky during a period of adaptation to climate change. And so therefore, being less risky is not only a question of being more aligned with regulatory needs, but also with a reduction of both the physical risk side and the transition risk that is being faced. And then finally, obviously, as we heard already, there's real push from investors to try to find these types of projects. So that's where in the longer term we need to get to. However, to get there, there are a lot of individual steps that are needed. And one example, you referred to the Blue Natural Capital Financing Facility. What we've tried to do there is to identify specific local projects that are not quite up there as the case of case 7 mentioned here, but at the other end of the spectrum, that is the reality, in particular in developing countries, of coastal communities that urgently need investment to deal with adaptation, and that this type of investment will only work if we bring in multiple revenue streams, and one of those could be around nature-based solutions, around mitigation. But at the same time, we also have to address the biodiversity risks. We need to address that entire complexity of investing in a regulatory environment that is not as predictable, etc. And that is where blended finance is such an important starting point. So blended finance is really a way to bring both philanthropic and grant-based finance, and in particular, the multilateral development banks on stream, so that they can provide the umbrella that then allows the private long-term funders to come in alongside. And the reason why this is such a huge leverage effect is that the infrastructure finance market is in itself one of the largest financial markets around, but it functions on this basis of a cooperation coordination of those. So whilst we've done a number of very small projects, the point of these projects is to show that a project pipeline is possible, and that this vision of a blue natural capital asset class that in the long run is accessible and attractive to more traditional institutional investors all relies on making these proof points. So we already heard we need impact assessment measures. Yes, and we have worked on that with ICN and other credible organizations that understand these nature points. But it's key to get engineers fully involved with conservationists, with financial people, so we have a solid, comprehensive framework here. But beyond the individual project, and I think this is another area I would encourage everybody to think about, is it's about coastal scapes, the whole role of infrastructure in the development of a whole coastal area, the impact it has on cities that are exposed to climate change. And so we need to think beyond an individually funded project and think about how that coastal scape can be funded, how the private sector companies that are active in this area can be engaged, and how obviously we can get these umbrellas of support through blended finance into the area. So there's a lot that needs doing, but we have some really interesting touch points. And we have significant transition in the financial sector. We already heard from the investor side, from the lender side, in particular the multilaterals. They are now signed up to this narrative, to this strategy of sustainable finance. And we are making sure that the blue and marine space entirely part and parcel of this. And we have the sustainable blue economy finance principles that are there to facilitate it for financial institutions. So this is an exciting, large opportunity, and you've opened the door to it for the dredging sector, which I congratulate everybody on.
Thank you, Torsten. It definitely also sounds like there's still quite a world to win. Maybe I'd like to hear now from the down on the ground perspective from you, Lotte. You work as a finance expert at a dredging company working on the projects themselves. What are the steps that you have taken in the past years? What have you seen as a sort of development going in this direction, or are you seeing anything yet or working on something?
Yes, thank you, Sien and the other panelists already. We see exactly this this movement also within the dredging sector. We're working towards. We've always been working towards a sustainable way of executing our projects. But the last couple of years, there's more and more. More and more focus on it. Also, you see it with the young engineers in the company. They're really into it. They want to do. They want to have added value, and they want to do sustainable. They want to work in a sustainable way. So there is really really a movement and a great evolution on this. Now, what we see, and I fully agree with the previous speakers, is that we first of all, and what we're doing now also, of course, with this publication, but also within different companies, we try indeed to get more familiarized towards different kind of investors. Let's say for us, it's also a new kind of world. We've been, of course, I'm indeed in the finance department. We've been working with commercial institutions, also with multilaterals, but not that much until now, with export credit agencies and so on. And you see now the evolution where we're working towards is to get familiar. With this new type of investors, but also the other way around, which this publication indeed is exactly the first step. So that's something that we need to do on company level as well. There is sometimes some negative prejudices on our sector. We need to get rid of that first of all. I think we have been working the last couple of years quite a lot, and now we really need to show what we can do and what our sector can mean in terms of sustainable infrastructure. So I think that's the first step, and we're taking it right now, but something to be built on in the future years already. Next to that, and what Torsten was saying. I understand we need to get away from the project. Of course, as a company, we look at projects. What I would love, and what if also next step could be, is to get things really done. We are talking a lot about it. I think if we can showcase, or if there are pilot projects, and I think you might have seen some, but if we can work further on that one, and we can also show the co-benefits and the positive impact and so on, then we're really started. Because indeed, it's like sometimes an unproven technology, let's say, or an unproven kind of business. So I think getting familiar with each other and getting some projects really into the concrete stuff, I think these are very important things.
Yeah, thanks you a lot, Lotte. We could just hear you, about just hear you. It's a bit bad, the connection. So, I mean, I think we've heard this before. Not your problem. No, that's okay. I think we've heard this a couple of times now, right? That we need those demonstration projects to really make the leap from that small scale projects where we are trying to do it towards that sort of really big field of infrastructure investment markets to really get ourselves connected to that. Also, maybe it might be nice to mention that most of the projects that are in the report, the cases that we show, those are projects that are not actually involving private investment. These are just projects that we have been trying to characterize in a way that's understandable to both worlds. So there's definitely still a step to take there. Paolo, I'm wondering, from the investor side, yeah, you've heard a little bit, you know a little bit about where we stand as the marine and freshwater infrastructure sector. What do you think we, or you as a private investor would need most in the short term to really make a next step? And yeah, who should move first or something? Is that us? Is that you? Is it us together?
Probably the third you said. The idea is to look into a potential pipeline of projects. There are some limits at the moment, specifically for the variety of different interests of infrastructure funds. That means that, for instance, we ourselves, we cannot invest outside the OECD world. There are a lot of other funds, infrastructure funds, which are targeted at developing countries or Asia or whatever. So it's not that there is no type of money to be looking to for projects outside, let's say, safe countries in the sense of the usual suspects. But in any case, it very much depends on the kind of infrastructure fund you're running. If I'm working for pension funds in Europe, it is quite difficult to have a very aggressive risk-return pattern. So this is the first point. So we need to assess, probably for the beginning, projects that are easy to understand for the beneficial owners, for those that at the end put the money into that, but they have to be long. So at least 15 years lifetime, because otherwise it's not infrastructure for us. It's private equity in the normal sense. The second point is, the third point, sorry, is the size of the project. We have been discussing the seventh case and this is a 30 million projects which can be financed directly by the developers, most probably from the equity side. For us, it's a very small project. This is another limit that we have to discuss, because the transaction costs related to, for instance, to the due diligence, to assessing the climate impact and so forth are pretty expensive, and we have to run these costs in any case. So the economy of scale says that we need to have a decent size, which says starting from 30, 40 million US euro, whatever you want to call it, but in any case, it cannot be very small. So a long project, probably not in exotic countries at the beginning, clearly easy from a contractual structure, and with a decent size in terms of equity ticket. Please remember that 60% of the total capex comes normally from the lenders. If we have a specific a jurisdiction where MLAs can help, this reduce or let's say is the de-risking. That means that part of the risk of investing in a country which has not yet reached the normal standard in terms of legal framework could be very important. And I agree with Torsten. I mean, it's not only saving the cost of Holland, but we need also to save something else, Rangoon or whatever else. So that's probably the answer to your question.
Thank you. Thanks. Yeah. Maybe we can take a little bit of time to tackle that project size challenge that you just mentioned, because I think this links to something, Torsten, you said about that we need integrated projects. I think you mentioned something oceanscape, coastalscape. How can we sort of make this step from indeed often, I think, smaller projects than 30 million to bigger projects? Should we take a whole coastline in one go, or how can we do this?
Yes, so to give you an example, we discussed this around the Baltic region. And so in the end, the Nordic Investment Bank was able to issue a blue bond, the first Baltic blue bond, which allows the Nordic Investment Bank to raise funds very cheaply that will be deployed into multiple projects around the Baltic that deal with wastewater management and general improvements. So coastal projects, coastal resilient projects would all potentially fit under such an instrument. So I think you have one extreme where you're looking for a single project with the right private investor and make that all stand alone. I think we need to open up our thinking somewhat. So it's about bringing projects together either in a local context, so different types of projects in one area or city or region. It is about projects bundled, as I just described, in the form of the Nordic Investment Bank, but it's also to understand that public-private partnerships are really a multitude of structures. So the private party can obviously and will obviously be the developer, the dredging company itself, but also a lot of the local contribution can come from private partners. So if you do a mangrove restoration effort, for instance, and in order to increase that component, the nature-based component, but also the local private component and civil society component, I think it's really key that we address the challenge that you mentioned before, which is these different languages. So there's not only a different language between sort of large infrastructure finance and the dredging world, but also between the dredging world and, for instance, the conservationist world. And so we've helped initiate the community of practice around grey-green infrastructure as a way to bring people together who work on projects from these different perspectives. So there are people from a finance background, there are people from an engineering background, and from a conservation background. So that helps to increase that discussion and therefore common language, but it also helps to show different types of projects from different angles. And then as you bring different projects from different angles together, as I say, I can financially package different projects, but they can also be packaged based on a clear policy commitment for a particular area where you say, for instance, here we have a territory, an island, a coast that we want to reduce the potential threat to the coast. We want to make that whole structure resilient and have a lot of renewable energy and want the wastewater treatment and so on. All of these things can be packaged, and that's really a way then to get to scale. But you need to start at all these different entry points so that we have a clear common language. And I think the fact that that long-term goal of proper long-term infrastructure investment is not achievable in all locations now is only, to my mind, is something that is a motivation that gets us onto a pathway, because there are many other ways how to get going now. And it's so crucial, because if we don't do this, we will end up with much more adaptation risk and resilience challenges going forward. So this is a critical transition.
Thank you. Yeah, I think we here at the table all feel that need to speed up, but still it's quite difficult to really get going. Maybe a question to anyone who would like to pick it up. Today we have at our table the dredging sector representative, we have a researcher from the fund, we have a private investor. Who are we missing at the table? We have Arjen from an NGO. Who should we be inviting as well?
The banks.
Which banks?
Commercial banks. They are the basis of the business, for us at least.
Or impact investors.
True, for sure.
Yeah, to get the private finance alongside them.
And the public sector, do they have any role to play here? I think a large one, but I'm not sure.
Definitely, yes, but very much depends where you are going to invest. I'm really sorry, Torsten, you are fully right. We are, as a financial investor, we are very focused on single deals. And this is that's probably the problem we have, because we cannot run too many deals at the same time. and we have to close deals pretty soon. Otherwise, the money is not deployed. So we have normally 3 years' time to invest money after the first capital fundraising. So that means that we have no time to look at very large projects, very complex projects. Therefore, for us, probably, sorry, but I need to say we need to be very focused on a single project, which can be very, very easy to understand. That's sorry for that, but I think it's relevant for. It's not a question of pragmatic; it's just a matter where how we do work in our industry.
Is that something that blended finance comes into you for you, Paolo? If others prepare and do all the work, sort of, and you just step in.
Yeah, no, but no, we start projects. I mean, we started investing in batteries in Germany by reviewing the market 4 years ago. So, and now we are deploying money, and this is very relevant for the energy transition. It's not that we do not study the development. The problem is that at a certain time you have to perform your own business. So.
I imagine, yeah, and I mean, working in this sector myself, I know that it can usually have quite a long run-up in project preparation before a project actually comes off the ground. That might be another complication. Let's see if I have any. Oh, let's see. There's a question from the audience coming in. The question is, here we go. Would bundling projects into a business building with nature, nature-based solution landscape proposition assist in initiating a movement at scale for private finance interest? And then a sub-question, but for what reason would private financiers be interested in that bundle of regional infrastructure developments? Do you need return on investment? Do you need a nice green level of sustainability? I think
diversification. It's always so if you have $500 million to invest, you cannot put everything in one bag, in one basket. So very frankly, if there is a development of a pipeline, as Torsten was saying, I mean, we can look at various projects within a scheme of development, but still you will need to diversify. Any single funds as boundaries. We cannot invest 20% of the total assets in a single countries, for instance, or in not more than 20% in a single countries, or not more than 20% in a single asset. So there are limitations that are regulated, and we need to apply them.
And I'm glad to hear that, because I think this goes in the right direction. This type of question is exactly what we need to work towards, which is to say we can beat the return on investment on other more plain vanilla transactions. We can think about ecosystem services as additional revenue sources. It's just that simple example. If I restore a mangrove in order to improve the storm protection on that coast, I do it from an adaptation perspective instead of building a cement wall. But at the same time, I'm actually creating carbon credits. So if I can monetize those carbon credits, I have an additional cash flow coming out of the project. And I like that diversification argument. I will certainly bring that forward.
Thank you. Yeah, I think we can see maybe one last question. I'm not so sure if this is completely understandable, said that we can't get the person to explain. The answer, the question is the financial model perhaps too linear? Maybe Lotte, you can try to say something about this. Do you feel that your financial models are being too linear?
No, if I understand, yeah, I just one interpretation of the question is, and also a little bit coming back to what Torsten said, maybe they mean, maybe the question is meant as just, too linear as having one revenue stream, and do we need to look in detail, it has been mentioned earlier on, to different revenue streams and different kind of revenue streams, which we are not yet entirely used to, like carbon credits, like feedstock, like ecotourism, these kind of things. So in that sense, I think until now, yeah, maybe too linear, and we need diversification, just like Torsten said. But I'm not sure if that's entirely the question.
Makes sense to me, yeah. No, I can imagine that we have been very used to just working for one public investor that will just loan the money for the projects, and there hasn't been a lot of need or maybe incentive to look for those diversified revenue streams. But that is on the bigger picture exactly what we do need to do. we are in the last minute of our session, and we have to be finished right on time. So I would like the opportunity now to close the session. This is the end of our session. A very big thank you to the audience for attending, and in particular thanks to our panelists and speaker Arjan, Lotte, Paolo, and Torsten for joining us today, sharing your wisdom with us. If any of the audience is interested in learning more about this topic, reading the report, or even connect to our initiative in any way, you can find that information at the website mentioned before by Arjan, www.financing-smafi.org, and we will also post this link in the chat after the session, so you can find it. I think that was very interesting, and thank you everyone for joining, and let's hope we can continue this in the future.
Thank you.